Hello and welcome to the Future of Real Estate. I'm Brett Ellis with the Ellis Team at Keller Williams down here in sunny Southwest Florida. Today I want to give you our Fort Myers and Cape Coral real estate market update for December 2025. We're into the holidays, almost to the new year, so let's give you a recap of where we are in December 25, brought to you by the Ellis Team. We are the market leaders in data research for the Fort Myers real estate market. So let's turn to the numbers and we'll show you some things here. Okay, the first thing I want to talk about is the official inventory numbers, and we'll kind of just see what's going on here. So as you can see, the trend line is it's up, way down back to 21 and 22. I think everybody kind of gets that concept. So where are we versus last year? Right now we stand about 8,196 officially. Back in November, we were August, let's see, 7,057, and we were about 7,913. So we're up just a little bit on where we were at this last year. And as we know, things peaked out over 10,000 officially. We keep some weekly numbers we're going to go over with you just from our MLS, and they tell a similar story, just slightly different numbers, but same story. So we want to cover that. The next thing I want to talk to you is sales prices. Look what has happened to sale prices since the inventory started going up. The sales prices have come down. And where are we at the end of 25? Well, the median price was $380,000. The month before that, it was $389,000. The month before that, $375,000. So we've kind of been hovering, that $380,000. We haven't moved much since June. So prices have not gone up. In fact, year over year, the median price is down 3.8%, and the average price is down 14.7. I've got some other graphs I could show you on that. So let's go back to our weekly inventory counts on the single family. As you can see here, we showed similar numbers. We never quite got to 10,000 because our numbers show just the Florida Gulf Coast MLS, and the official numbers can pull in some other MLSs where some outside agents might actually have listings in this area. We belong to several MLSs, but it's hard to kind of go back and compare which listings are in which MLS. So that's why we use the official and what we do. Listings are on the rise again. That's for the single family homes. And for the condos in Lee County in Southwest Florida, they're on the rise again too. And of course, that's the trend line. So now let's move over, and we've kind of gone over prices. We've gone over inventory. Let's look at homes closed. The big yellow line, which is right here, in November, we stand at 992. Now we're going to share some amazing things that might startle you a little bit. What year is 2025 shaping up to be? And I asked this question of our team the other day, and I got two different opinions. One said, well, it's looking a lot like 2023. And at the end of November, it's very close to 23, but it's also close to this blue line, 2019. I think the yellow line is more closely resembling the 2019 market. But in any event, it's similar to both. So we could talk about what was going on in 2019 and see if that leaves clues as to what will happen in 2026. This is a longer trend line from back in 2020. I don't think that means as much. And this is from 2022. The one thing I do want to look at right here is the dollar volume of inventory. So you might say the total dollar value is when you look at the total dollars sold. That's, you multiply the number of sales by the average price, and you'll get, or the total price, and you'll get the total dollar value. 2024 was the fourth best year on record. But here's the one thing I really want to look at is the homes closed graph. So as we get close to ending out 2025, some people say, well, we're going to be below 2024. The reason a lot of people say that is a lot of agents out there are hungry. They're dropping out of the business. They're just not making deals. So they feel like this is a worse market than perhaps it really is. The truth is, I expect Lee County sales numbers on single family homes to eclipse this number. I think it's going to eclipse the 2023 number. I think we're probably looking at the 2019 number, which I mentioned earlier, or just in that ballpark range, maybe slightly higher, maybe slightly lower. If that's the case, that would put us about the third or fourth best year on record. I think we'll probably come in underneath this 14,426, which was 2022, and of course 2021 was a big number. But I think we're probably looking at the fourth, maybe fifth, but I think the fourth best year on record in terms of number of sales, and that's not a bad market. So if real estate agents are struggling and telling you, hey, the market's down, we don't, prices are down and inventory's up, that's all true. But if they're telling you this is a horrible market, that's not true. A lot of sellers are selling and a lot of buyers are buying. It may be the fourth best all time. We won't know until we get to the end of January. But my preliminary research, remember, nobody researches the real estate market here in Fort Myers or Cape Coral more than the Ellis Team. My preliminary research shows, and all the closings aren't in, that we're going to eclipse those numbers. And if that's the case, the fourth best year in records, not too bad. So let's look at a couple other things that I thought I like to track, okay? So the Ellis Team came up with our proprietary Ellis Team Current Market Index. It accurately predicts prices going forward. Now, what do we see here? Right now, the CMI index is rising. That's not good for prices going forward. Until we see that level off and start to dip, will we see prices level off and have a chance at going up? So that's not good for prices near term. I checked some lag and lead inventory lag and lead times with interest rates and whatnot. I'm not seeing anything particularly alarming to show you there. I do want to show you the total pendings. Look at the overall trend here. Total pendings are going down just a little bit. They did tick up for the last week, so that is good. But we need to see those pendings start coming up more. With the economy getting better, GDP growing a little bit, with interest rates starting to come down a little bit, at least the Fed's lowering rates. The mortgage market hasn't moved a whole lot. We'd like to see that start happening. If that starts happening and buyers start getting confidence, they're going to get more money in their paychecks come January. So when they start getting these tax refunds and less deducted from their paychecks, I think confidence is going to grow a little bit. That's more spendable money. Will it go to real estate? Will it go to paying off debt? Will it go to buying TVs? With that, we have to wait and see. But with fuel prices coming down, egg prices coming down, a lot of component prices are coming down. That will impact inflation. I think that gives the Fed room to lower those rates later in the year, mid to late year. And if that happens, that could be a very good sign for real estate and off to the races for the economy. Let's look at our supply and demand. So this is our inventory levels. And as I said, they've been going up and our pending sales have been going down. Now, how do we measure the difference between the two? I created a chart, I call it the gap. And that all it does is measure the difference between these two. Here's the gap. And you can kind of see the gap is widening again. And that happened. When did that happen? It started August of 24. It maxed out about February. So what started happening in February of 2025? Properties started selling and closing. And sellers started taking the properties off the market because they didn't like prices. Well, if they didn't like prices here, they're not going to like them here, because prices have come down since then. Here are the weekly inventories that we track, and they're going up on the single family, just as they did last year, but the pace are going up. If I look at this one here, we're not to January yet, so it's hard to tell what the pace is going to be. And the condos, they're doing a similar thing. So I've kind of been looking at the pacing, and I did have one encouraging sign on another graph, which I don't have up in front of me now, that showed, and it might have been, was it the gap? I think it might have been the CMI. Yeah, the CMI is escalating pretty substantially now, but back in October, it shot up at an even much quicker clip. So the good news is that we may not have as large a draw up in inventory. Remember what happened last year? We had the hurricanes in late September, October. We had two of them, Helene and Milton. It pushed closings back. It took listings off the market because of damage. A lot of those people have gotten those properties fixed up, at least able to sell on the market. Not all of them. So there was a rush to bring things to market when people could, if they no longer wanted the property. I think we'll see another rush because we always see one in season. Will it be as big of a rush? Maybe not. So if there's less of a rush and more buyers start to turn on, I think buyers are getting the message. And here's the message I think they should get. Let's go back to that pricing. If you're waiting for prices to come down, it's already happened. Will they come down a little bit more? I can't say. The market's going to determine that. Even though I'm a data analyst for the Fort Myers and Cape Coral real estate market, I can't say exactly what the market's going to do. But what I can say is it's already happened. And now that things are getting ready to turn, this might be your opportunity to buy. And the reason I say that is we never know that prices have gone up until we see it in the rearview mirror. By that time, it's too late. So the question is, let's pretend like this is a graph where prices go down and go up. Are you better off buying here or buying here? I think you're better off buying here because by the time this happens, you're at the exact same place, but every buyer's onto it, and now you're in bidding wars. You know, a lot of things are going on, and you end up paying for more for properties going forward. This isn't the graph to actually show that, but you kind of get the point that I would rather buy just before the absolute bottom than after the bottom, because when it's after the bottom, everybody knows it, and just before, not everybody knows it. And the other thing is this. I talked about this on a future video. I will try to link that video to this video. I wouldn't try to time the market because there's been virtually no point in time when you would be worse off if you kept and held that real estate. And I showed that graph back in 2005, and I asked people, if you had the chance to buy every piece of property back in 2005, even though we were 21, 22% above maybe where we should have been, would you do it? And everyone today said yes, because you buy and hold that and you're going to make a lot more money than you will in almost anything else. And that was at the height of the market. Imagine if you were in a market where the prices have already come down and you're not buying at a extreme like that was. So we took an extreme example and showed people why, in their own mind, in their own words, they were better off. And I think that's where we are today. I would be a buyer. I've bought real estate on the way down here, and if I get the chance and I've got some extra money, I'll buy again because I believe. Matter of fact, I got my eyes on some things right now that I'd like to buy. So if you'd like to talk to us about your buying opportunities, always call the Ellis Team at Keller Williams, 239-489-4042. If you're a seller and you'd like to sell, you want a realtor that has aggressive marketing, high-tech marketing, 3D home tours, the whole hoot and caboodle, targeted marketing directly to the home buyers. The Ellis Team provides that high-energy, high-tech marketing that people are looking for, and we've got the data analysis like nobody else, so we can help advise you where your property needs to be priced, where you should take an offer or not take an offer based on what's actually going in the market today, not how the agent feels about the market. Remember, I think 2025 is going to be about the fourth best market for closings, and that's not the headlines you're reading today, is it? Thanks for tuning in. I'm Brett Ellis with the Ellis Team at Keller Williams, and we'll see you on the next one.
The Ellis Team at Keller Williams is a family affair. Always call the Ellis Team, they'll handle you with care.